Good day. Thank you for joining me. My name is Warren Davison and I'll be taking you through the April 2020 PSG Wealth Fund performance. Setting the macro theme. April saw global equities rebound as investors began to focus on expectations that economic lockdowns could soon ease and economies to start to recover. Looking at US equities, these shares were up. The S&P 500 saw its strongest monthly rally in 30 years, shrugging off negative data indicating sharply rising unemployment. Eurozone equities advanced as some countries began to allow some parts of the economy to reopen. The healthcare and information technology sector were among the top gainers. Looking at UK equities, they also recovered over the period. The government declared the country had passed the peak of COVID-19 and began preparations to ease lockdown measures. Emerging market equities advanced too, but slightly underperformed developed markets. India and Pakistan were the best performing markets in the EM index, supported by easing from their central banks. Digging deep into the fixed income indices, there are always many questions around fixed income as a safe haven asset. However, the subcategory has its own return drivers, as we have seen played out recently. Due to risk-off sentiment, emerging market bonds, corporates, and other high-yielding fixed income yields widened, which caused a negative price movement. We can see this from the above 3-month and 1-year figures. For the month, we saw risk sentiment rebounding, with higher yielding and corporate bonds outperforming their government counterparts. What I've also included here is a return matrix from Goldman Sachs, which breaks down the fixed income indices into their different maturities, as well as government, corporate, and high yield. What one notices is that in this tricky environment, growth assets sold off, which include the likes of the high-yielding bonds and other corporates. Looking at the US, for example, we see that long-term treasuries held up year to date, as yields declined. On the flip side to that, high-yielding bonds were not a great place as these yields blew out post the market turmoil. Just to recap on PSG's multi-management philosophy, before we get into the funds, it's important just to remember the purpose of the multi-management fund range. Our objective is not to back one horse, but rather to spread the bet across a few horses which we feel have a competitive advantage at what they do, whether it be their style, thinking, or other. When we combine these to produce a final portfolio, what we look for is consistent above average performance, i.e. first and second quartile, below average risk, with us focusing on the Sharpe ratio, and a competitive fee relative to the peers. Now looking at the PSG portfolios, we'll start by looking at the asset allocation and remembering that the PSG Wealth Global Fund of Funds are multi-asset portfolios and therefore include both equity and fixed income investments. Looking into fixed income, as I showed earlier, this asset class will include exposure to governments, corporates, and high-yielding fixed income, and will therefore react accordingly within the portfolio. Looking at the relative rankings, these remain strong across the board. However, the shorter term on the lower risk spectrum encountered some pressure due to the corporate high yield spread. Over the recommended holding period, which is illustrated by the rectangles, here we can see we've achieved top quartile for 3 of the 6 fund of funds. The PSG selected managers had a great month, with 73% of the underlying managers outperforming the peer group average over the last month. Value stocks lagged growth again, with the MSCI World Value and MSCI World Growth net return returning 8.8 and 12.8% respectively for the month. Looking at the quantitative risk radar, The managers bounced back strongly for the month, with most managers coming off the radar. 2 funds only appeared on the quant radar this month. Tempertal Global Balanced remains on the qualitative radar due to fund manager changes. Now, looking into the funds and starting with the Global Preserver. The fund has outperformed its sector over the month and, however, has underperformed slightly against its sector over the recommended investment horizon of 3 years. As you can see from the relative tables, shorter term numbers have felt the pressure of the global sell-off. However, the longer term numbers remain favorable. As mentioned earlier, it is important to remember that the fund does hold roughly 20% in equity and will experience downturns during this time. The recent market correction affected the fund in 2 ways. Firstly, equity markets detracted, and secondly, global credit spreads widened, causing further price decline, as we saw in the initial recap. Looking out on the longer term, however, the fund has still remained top quartile and second quartile. Onto the global moderate. The fund has outperformed its sector over the month by 52 basis points and over the recommended investment horizon of 5 years. As you can see from the relative tables, the fund remains in the second quartile, which is still above average and meets our pillar of consistent above average performance. The Global Flexible has also outperformed its sector over the month as well as over its recommended investment horizon of 7 years. Looking at the relative table, the fund has held up exceptionally well over all periods, remaining top quartile from 1 year all the way to since inception. With the Global Creator, the fund has also performed over the 1 month and over its recommended investment horizon of 7 years. This fund as well has performed exceptionally well in the shorter term and longer term, with the active managers within the portfolio delivering on their stated objective. As a conclusion, looking at each of the underlying 3 pillars, it's important to know how each of the managers have performed in line with these pillars. So, looking at firstly, consistent above average performance, secondly, with below average risk or a better Sharpe ratio, and thirdly, competitive fees. I have not stated fees here due to this being on the latest fund fact sheet. Thank you.